Hello there, Maverick Traders. This is Rob Reinhold, and it is the Trading Room. We just wrapped up May's monthly options expiration, so we will be doing the accounting on Monday, trader payouts on Tuesday, and level advancements on Wednesday. That month is now gone. We are looking forward to the month ahead. Let's jump into it. In this session, we're going to be talking about last week, what happened, big news on the Dow Jones. Well, I shouldn't say big news. It's just a number. We'll talk about it in a second. We'll take a look at the current market. We'll take a look at the current sectors, score everything from +3 to -3, and we're going to take some of those sectors and find the best trades in those sectors.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
So this week we saw new all-time highs in the market. S&P, the NASDAQ, and the Dow Jones broke above 40,000 points. Now look, I don't love the Dow Jones Industrial Average. It's kind of a dumb index because it's a price-weighted index, meaning that the highest priced stocks have the largest weighting. So a stock like Apple is going to have a way bigger impact on the Dow Jones than like a stock like Walmart, even though they're both giant companies. And then if a stock splits, all of a sudden it becomes half of the value or the half of the meaning in that index. It's just a silly index, but look, it broke through 40,000. I'll stop my complaining about the Dow. We also saw continued weakness in the US dollar, weakness in the government bonds. That is very bullish in stocks, and we see gold break to a new all-time high by the end of the week. So risk on assets are really doing well. And look, this is just a bullish market. We're going to be talking about this bullish sentiment. The markets have a mood, and I always say that, the markets act like people because it is just a collection of people. When you're in a good mood, everything went well, and you were having a great day, and then somebody you don't like says something to you, and you just brush it off. You brush it off, and you say, whatever, and it doesn't even hurt you. Remember the days when you have a bad day, and everything is, not going right, and you're in a bad mood? Well, that same comment is very likely to make you more upset. The market has a sentiment to it, and sometimes it's in a good mood, sometimes it's in a bad mood. And we saw exactly that this week because we got the PPI. This right here, this to me was the tell of the week. This report came out hot. Look at that number, 0.5 when it's supposed to come in at 0.3 and 0.2. That's a hot number. That should have sent the market down. The futures went down for about 5 minutes, and then people came in to buy. By the end of Tuesday, the market closed at its high. And then we get the CPI the next day, and it was as expected or slightly better than expected, and the market took off. So think about it. In a good sentiment, it discounts bad news, it ignores bad news, and celebrates good news. When the market's in a bad mood, it discounts good news and punishes bad news. We are in a clear bull market here. Now, I always like to use this story to really get my point across on being on the right side of the market. Years and years ago, Joe and I were arguing about the market. And this was like probably 25 years ago. And he was saying that he thought it was going to go up. And the market had already gone up a lot. And I was trying to tell Joe all the reasons why it wasn't going to go up anymore. All the reasons why it shouldn't be as bullish as it was. And I said, Joe, I know I'm right, because I gave him all of the logical things of why this market shouldn't go higher. And I said, Joe, I'm right. And he looked at me and he said, I don't care if I'm right. I just want to make money. I just want to be on the right side of the market. And I realized that my ego was more important than being on the right side of the market. I wanted to be intellectually correct. And Joe said, you know what? I just want to be on the right side of the market. I don't have an ego. That story has just resonated with me so much because it's very easy for us as human beings to to get on the wrong side of a market and then fight it and fight it and fight it and fight it. Why? Because we have this ego tied up in it. We don't think it should go this high. We believe this or that. As a trader, your job is not to have an ego. Your job is to just be on the right side of the market. And right now, the market sentiment is very, very clear. Let's take a look at the numbers. Let's take a look at the charts. Everything is telling you this market is bullish and it's most likely going to go higher. This week we had pretty solid gains across the board. Look at these numbers. This isn't a killer week, but just so solid. Everything was up. Every single thing was moving higher. And when we take a look at the stock charts or the chart of the S&P, you can see that we've already gone a long way. We came up to that all-time high line. This was Wednesday. We broke it. We broke through it and we closed at the high. We got a little tired. Look, this has been a big run. These candles are very, very bullish. I know that they're down candles. I know that. I understand that. But after a huge run, and it just is simply going sideways, we could theoretically go all the way down to 52.60 and still be just fine. Still be just fine in a bullish market. This market is very strong. And these candles here, these candles the last 2 days, look, I know they're red candles, but guess what? Long lower shadows on Friday, recovering. This market wants to hold. No, it is tired. We went through a lot of energy to get up to this level. It's tired. We're probably going to spend a little bit of time here, but everything is telling us that this market is likely to go higher. We take a look at the heat map for the week, and you can see there's green everywhere. Yeah, there's little reds dotted in here or there, but this is very, very green. It is a broad rally. This rally has broadened out quite a bit. So the market outlook is flat out bullish. I think the first half of the week, we could still be in our resting phase to where, we just spent a lot of energy. We just broke out of these levels. I could easily see Monday, Tuesday, Wednesday just being a resting time. But I do think the next move is higher. If we do break below 52.60, then I think we've got to take down some bullishness. But until that happens, this market is flat out bullish. And one of the things to add in it, the Chinese economy is recovering. Last week they had a pretty good industrial sales or industrial production number. And if you take a look at some of the Chinese stocks, take a look at stuff like Alibaba, that's running higher. Tencent Music, that's running higher. There is a lot of strength right now in Chinese stocks, and that's really helping this market be even more bullish. On the schedule this week, there is not a whole lot. In fact, I'm going to say there's nothing of really any importance this week that you have to worry about. So this is another reason why I think this is going to be a slightly bullish week. I don't think it's going to be like a crazy +3 week. I think we're just going to keep grinding higher. We're above the 20, we're above the 50, and the slope of both of those moving averages is now moving back up. This is a +3 market, the most bullish that we can get. Let's go ahead and take a look at the sectors and try to find where the real strength and weakness is in this market. If we take a look at the numbers of last week's returns, you can see that technology was the best sector. 3% run. Real estate had a very nice bounce back. That's been a weak sector. That got upgraded this week. Everything else pretty solid. The underperformers, no question about it, were consumer and industrials. Consumer and industrials, those were the underperformers this week. And you'll see in the charts that they are underperforming the rest of these markets. So let's take all of these charts one by one, and we're going to give it a score between +3 and -3. Utilities has been a +3 for a while, and it remains a +3. Had another solid up week. There's no reason to think that utilities is going to stop anytime soon. Communication services. Look at these candles. I love when charts do this. This is such a tell. This is such a tell. It's saying every single day was a green candle. We gapped down, we ran higher. We gapped up, we ran higher. We gapped down, we ran higher. what it's saying is every day people came in and bought this sector regardless if it gapped up and down. And then take a look at these candles. It paused at the last of the week, but they're all green candles. This is a solid +2, maybe even a +3. If you said, hey, Rob, this is a +3, okay, there's definitely some strength in this sector. Real estate was a 0 last week, and this week it gets upgraded to a +2. So that is one of the sectors that was strengthened this week. Next up is healthcare. Healthcare also strengthened. Looking really good here. No reason at all to think that this healthcare sector is not going to go higher. This comes in at a +2. Over to industrials. Was a +2 last week, remains a +2. Take a look at this week though. Not a lot of great price action. It's still a +2, but it's definitely one of the weaker +2s out there. Still likely going higher, but I'm not looking to be super bullish here in the industrial sector. Next up, financials. Wow. Look at that move. Financials went up almost every single day this week and closed at highs. This is about a +3 as you could possibly get. Financials are very, very strong. Moving on to consumer. Someone forgot to tell consumer that there was a party going on, and you can see it's just sitting there. It's at a 0. So one of the weaker sectors, but it's not going down. Remember, in a broad bull market run, everything goes up. A rising tide lifts all boats. That's what's happening. This is just not as strong as everything else. Technology, +2. Solid +2. That's where it was. I guess last week was a +1, so this is going to get a move up to a +2. Very strong move in technology. Here we have the material sector. Was a +2. Same thing on this one that we saw on the industrial sector. The price action this week, not great. Even on a day like Wednesday when the market really ran, this didn't run. On Thursday when the market went up, this actually fell quite a bit. It's not going down. It's just not quite as strong as the rest of the market. It's still a +2, but along with industrials, something I'm looking to be less bullish on. And here we have energy. Went from a 0 to a +1. You know, same thing. It's underperforming the rest of the market. So this is where we were last week as far as our ratings go. Financials gets a bump up to +3. And then technology, healthcare, and real estate all jump up to a +2. Energy moves up to a +1. So this is where we are. You can see it's very clear. The leaders are financials and utilities. That's where the most strength is right now in the market. And then everything else is basically a market perform. All the +2s, they're going up along with the market. Energy and consumer are lagging. They're not falling, they're just lagging. So as this market continues to go higher, understand there's no great shorts out there. There's nothing great that's short, especially in a broad market rally. Any shorts you do take, which we are going to take some shorts, are likely going to be a drag on your performance. That's just how it works with basket trading. You just have to get used to it. Those are there for safety. Those are there just in case this market isn't as bullish as we think it is. We're hoping to make some money on those if the market pauses or falls a bit. Let's go ahead and jump into a new section in the trading room. We are taking this from the Trade Collective. So we wrapped up the Trading Collective this week, and this is something I wanted to add into the trading room. One of the things we talked about in the Trading Collective is that we have open slots. We have a certain allocation that we want to maintain as far as trades go, and we make trades and then they roll off and it leaves a slot open. So all of the black numbers here, they are trades that are existing. So right now we have one trade in utilities that is a +1 trade. It's a mildly bullish trade. We have another trade in industrials that's a +1 trade. So we have 2 trades currently that are a +1, which is a mildly bullish trade. Down here, we have our slots available. Now we are at a +3 market, And at a +3 market, these are the slots that we can take. So we could take 2 more +1s. Right now we only have 1 +2 and we have 1 +3. So again, we can add into these slots. So the green numbers here are the slots that I'm going to be looking at adding here today. Looking at adding a communication services, looking at adding a healthcare, and looking to add 2 sideways trades in materials and energy. So let's go ahead and look at those trades. Remember, our trades that we're looking to make are going to be dictated by the slots we have available. When trades drop off, we're going to fill those trades with new trades in the sectors.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders who trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
First up is our trade in Comm Services. Here we have Spotify. Spotify's a really nice pattern here. It is a nice ascending triangle pattern. It's a nice ascending triangle pattern. We've got a rising low here. We got some resistance up here around the 308 area. This thing is ready to move higher. Will it move higher? Who knows? Again, who knows? But this is what technical analysis is all about. We do 100 of these trades. More than 50-50 of these are going to move higher and move higher on a fairly substantial basis. So we need to make a trade here. Now we're going to be making a +1 trade here. So one of the things we've added to the trading room is these trades over here. If someone said, well, I want to be a little bit more bullish in communication services, then you would take a look at something like this trade, a May 31st, 305, 310. If you wanted to be a +3, then this would be the appropriate, this would be an appropriate trade for a +3, or you could do a even higher vertical spread. Something like a 310, 320 vertical spread would also give you that very, very bullish trade that you're looking for. So this is going to be an addition to the trading room that we're going to be using from now on, where again, we're going to take a look at all the trades that are out there, where we have some open slots, and we're going to choose, hey, we're going to do a +2 trade here, a +1 trade here. This overall capital allocation plan is guiding which trades we actually make. So of course we want you to take a look at this and say, okay, well, I'm looking at my trades. I want to get a little bit more bullish in the communication services sector. We have chosen to do a +1. You say, you know what, I'm going to do a +2 or maybe even a +3. We're going to be giving you some other choices to make in the trading room going forward. Next up, our trade in healthcare. We're looking to be a +2 here in healthcare. Here is Moderna. Moderna is a very nice high base here. We came up here after a run of a nice breakout of the 112 area. And you can see we spent about 2 weeks between 117 and 129. And now we've broken out to the upside. This one looks really, really strong. We're going to be doing a +2 on this one. So that's going to be the May 31st, 135, 140 bull call spread. So again, looking for 135 up to 140. We're looking for a fairly bullish move here on Moderna. If you're looking at this and saying, hey, I've got a slot open in healthcare, but I don't want to be as bullish as that, take a look at that June 21st diagonal call spread. That's going to be a slower moving trade with lower delta and positive theta on it. That's going to be a really nice trade. All right, let's move on to the consumer sector. The consumer sector is the worst sector at the moment, but the worst sector at the moment is a 0. We are still going to be taking some shorts because just in case, if this market doesn't do what we think it's going to do, we want to have some shorts working to offset some of the losses we're likely going to take on those long trades. This is Coty, C-O-T-Y, and you can see someone forgot to tell this stock that there's a party going on in the market. And there is a breakdown of a base here. We are approaching this support down here at 1045. But look, this thing is so weak. I think this 1045 is going to break. I've got a target here of $10 on this one. So we're going to take a look at this -2 here. The May 31st 11.10 bear put spread, or you could take a look at the May 31st 11.1050 bear put spread. I don't like any -3 trades here. I don't think the market is giving you any reason at all to put a -3 trade on whatsoever. On our allocation, we had 0 slots available at -3. We're not even allowed to make a -3 trade here because of our capital allocation model. Let's go to our 2 sideways trades. We had sideways trades in materials and we had sideways trades in energy. So here is CF Industries. Now CF Industries, I wanted to go back just to show you exactly what CF Industries has been doing here. As you can see, this stock is very, very sideways. Very sideways over the last, let's call it 6 months. We are down at the bottom of the range, so I'm really looking at more of this area here at the moment. I'm looking at like a 74, 77, 80. Really looking for it to stay at the bottom end of this range, and I'm not looking for much time on this. So the trade I'm looking for is this May 31st, 74, 77, 80. You could look at doing the horizontal spread, the June 21st, 77, and then sell the May 24th, 77. I prefer butterflies to horizontals. Look, they give you really close to the same risk graph, but the reason I don't love horizontals is that volatility can make them a little bit screwy. And what I mean by that, whenever you have 2 options that have different expiration dates, volatility is going to affect them differently. So if there's a spike in volatility, this could actually negatively affect this because the volatility is going to have a much bigger impact on the May 24th than it does on the June 21st. So volatility spikes, even if it closes at 77, you theoretically could still have a loss. With the butterfly, since all of the options are the same expiration, the volatility is very muted, if any volatility is going to affect it. So again, I just prefer butterflies. It makes it a little bit more simple to me than worrying about that volatility. Let's move on to the energy sector, another sideways. This is British Petroleum, BP. As you can see, the moving averages has flattened out. We have not made any new highs. The sector is pretty much sideways. The big question is, where do we want our range to be? Right now, the stock is at 37.50, and I'm very happy with that strike. So 37.50 is going to be my middle strike. I'm looking to go all the way down to 35, up to 40. As you can see, pretty wide range here. This stock does not look like it's going anywhere all that soon. So I like this 35, 37.50, 40 butterfly. You can do the horizontal spread. Like I said, I prefer the butterfly. Really the same risk graph, but you just don't have to worry about volatility movements on the butterfly. So those are the 5 trades that are going to fit in our allocation. Next week, some of our trades are going to roll off that we made a couple weeks ago. And those are going to open up new trading slots, and we're going to look at the market. We're going to say, hey, these are the slots we have available, and then the trades we're going to be making are going to follow our capital allocation model and plan. If you have any trades you want to share with the rest of the group, please log into the Maverick Trading members area, go to the forum, let's get some chatter going. I always love to see our traders working together to help everyone out. Wrapping this up, remember what Joe Jensen said. Wise words. I don't want to be right. I just want to make some money. Hopefully you understand what that means, because when you hear that, it's like, wait, if you make money, you are right. If you lose money, you're wrong. Again, his primary concern is not being right or wrong. His primary concern is, am I on the right side of the trade? Am I on the right side of the market? It's not, did I call it? Did I call it and I pat myself on the back? Joe doesn't care. Joe just wants to make money. This market, it's a +3 market. You may not agree with it. You may not like it. You may feel differently. But guess what? It's a +3 market. So make your trades accordingly. And when you're having some drinks with your buddies, then you can talk about how this market is out of control and has gone too far and it shouldn't be up this high. But the whole time your trades are bullish. That's totally okay. It took me a long time until I did not trade my opinion as a trader. It's one of the things I'm the most proud of all the work I've done over the years. I can trade totally different of my personal opinion on what the market is going to do. Work on that. Think about that. That's what you want to do as a trader. Thanks for joining me. Everyone have a great weekend. Take care, everybody. Goodbye.